Alright, so this is the performance report of my gap trading newsletter for the month of April and prior to April. What you're looking at here is a selection of the current stocks we're holding on to versus the Dow Jones Index. We're currently 4.73% above, 0% profit. The Dow Jones is currently down. So obviously we are making money with gap trades, whereas index funds would be a little bit negative. Now I can't show you the trades we are currently in because I'm making this video public, which means anybody can see it. And if you're not paying for the gap trading newsletter, well, then it wouldn't be fair for the people who are paying because, you'd be able to see what we're trading. Then you wouldn't have to pay. So I'm going to give this performance report to you as kind of a promotional video for my gap trading newsletter without actually showing you individual trades that we're holding on to now. I will be showing you some past trades. So just quickly, an overview of what we got going on in April. Our average return is 3%. We've got a win-to-loss ratio of 7 to 4. Our annual percentage return is 126%. Our trades are position trades. We stay in for about 23 days on average, and our average profit is 7.1. Our average loss is 5%. So overall, our total profit to loss ratio is 7 to 5. Now, besides beating the market, we do have some trades that are especially successful. And I'm going to go over 3 of them with you. These are from the past, so these are not stocks we're currently holding on to. I scrunched the images. Doesn't look very good, but here's the basic idea. We saw a gap that looked like an area gap, but I predicted it's not an area gap. In fact, it's a continuation gap that appears to be an area gap, and these are often very profitable. So you got to realize that even though we're just trading stock, we can make a huge profit margin in a matter of days. If you are trading with options, you can make a lot more money, but this newsletter just focuses on stock. It's for position traders and investors. Now what we did was we bought after that gap. And the stock did indeed rise and fell again, so we decided to sell before it fell too much. So we sold at a margin of 11.1% in 12 trading days. Another successful trade we had way back when I first started this newsletter was another gap that was a lagging gap. You could see that the volume didn't correspond to the day that the gap occurred. It actually came the day after the gap. And it was a bullish engulfing candlestick that made us believe that this is actually a breakaway gap that will go up. Now it's stabilized, and we bought it this kind of doji star. Now there are 2 ways it can usually go after you see a doji star like this. One is it could fall and we get out the next day and take a loss. The other is the doji star is confirmed as a deliberation when we see a candlestick above it, and we continue holding onto the stock. So that's what we did. It did fall a bit, but we're going to hold on because generally this is a good sign. And indeed, it did reverse from this slightly bearish, probably overbought trend after it finished out evening out to where it was what investors considered to be a stable trading region. The bullish trend continued. And once we saw the stock more or less stabilize, we got out. That was a 12% profit trade, and it took us 17 days to make that profit. Finally, we're going to look at another one. This is EYES. We made 23% profit. Remember, this is stock, not options, so this is very uncommon. We got in after a breakaway gap, and we decided to get in on the day after the gap immediately because this volume was so high, and this candlestick is generally pretty safe to bet on. So we got in the next day at open. We held on until we saw another gap, which we got lucky with, but unfortunately that was an area gap, and once it filled, we realized that's not going to be a good play to hold on to, so we got out on open after we saw the stock bounce back a bit. We got out at about 14 bucks. So this was a 23% profit, and this trade really shows you that getting out at a certain time and taking your profit when you can is very important in gap trading. Otherwise, if you held on, you'd find yourself back where you started. So that's it. If you want to double check our performance versus the Dow Jones, this is it. You got to realize that I can't show you what we're holding on to, but I can show you what we had in the past. So if you have any questions or comments, leave them below. If you want to sign up for my newsletter, I'm going to put that link either in this video or down below, probably both. So go ahead. If you sign up using the promo code DVGP, I believe, I'll put it somewhere, you can get the first month for $1 only. Check it out.